A newly confirmed federal banking guideline involving a $250 monitoring threshold has recently been announced by financial authorities. If you receive Social Security, a pension, or any form of government benefit, this information is directly relevant to you, and understanding it clearly could help you protect your money starting right now. I'm Zayne, and welcome to Senior Security Updates, where we break down the financial and policy developments that affect your retirement income in plain language you can actually use. Today, we are explaining exactly what this banking guideline means, who it may affect, and most importantly, what practical steps you can take to keep your money secure and accessible every month. Stay with me through the entire video, because the details in the second half are the ones most people overlook, and understanding them could help you avoid problems that are entirely preventable. Starting with the basics, what this guideline actually is. Let's begin by establishing clearly what this update involves, and equally importantly, what it does not involve. A new federal banking compliance update has been finalized, and it centers around a $250 monitoring threshold that financial institutions across the country may apply under certain circumstances. Before any concern begins, I want to be direct with you about this. This is not a reduction in your benefits. It is not a new fee. It is not a restriction on how you use your own money. What it represents is an additional layer of financial security, one specifically designed to help protect the accounts of everyday Americans, and seniors in particular, from the growing wave of fraud that targets retirement income. Why this is being addressed right now. Fraud targeting older adults has become significantly more sophisticated in recent years. In many cases, criminals attempt to take advantage of the timing of benefit deposits. They monitor when Social Security checks or pension payments arrive in accounts and try to act quickly after those deposits occur. In a number of reported situations, by the time the account holder noticed unusual activity, funds had already been moved and were difficult or impossible to recover. Because of patterns like these, federal regulators have been working to strengthen financial monitoring systems. The $250 monitoring threshold is one of the tools designed to help identify unusual activity before significant harm can occur. Think of it less like a barrier and more like a security camera that becomes more attentive when activity appears out of the ordinary. How the monitoring actually works. Banks may apply enhanced monitoring procedures to certain transactions that reach or exceed $250 under specific circumstances. But here is the important distinction. Routine transactions typically continue just as they normally would. Grocery purchases, utility payments, rent contributions, insurance premiums, prescription costs. These everyday transactions generally proceed without any interruption. Monitoring systems are designed to identify activity that appears different from a customer's established banking pattern, not to flag ordinary day-to-day spending. Here is a straightforward example. If your account has shown consistent monthly activity for years, regular benefit deposits arriving at predictable times and familiar bills being paid in similar amounts each month, that pattern becomes recognized by the bank's system as your normal financial behavior. Now imagine that someone gained unauthorized access to that same account shortly after a Social Security deposit arrived. They begin attempting to send multiple rapid transfers to unfamiliar recipients in amounts at or above $250. That activity looks dramatically different from the account's normal pattern. The monitoring system is designed to pause that kind of suspicious activity before funds are moved to an inaccessible location. The goal is early detection, creating a moment of review before harm is done, rather than trying to recover money after it has already been taken. Will this interrupt your daily banking? This is one of the most common questions people have, and the answer for most seniors is reassuring. For individuals who maintain regular and consistent spending patterns, routine banking activity generally remains completely unaffected. Bill payments, everyday purchases, and typical withdrawals usually continue without interruption. Monitoring tools are designed to identify irregular or unusual activity, not to review transactions that fit an account's established pattern. If your banking habits stay consistent, you are among the least likely to experience any review at all. What this means for Social Security and other benefits. Let's address Social Security specifically, since that benefit is central to so many retirees' financial lives. Retirement benefits, disability payments, SSI, and SSDI continue to follow the same federal deposit schedules they have always used. If you normally receive your payment on the second Wednesday of the month, that timing remains unchanged. If your payment arrives on the first of the month, that also remains the same. This guideline does not change benefit amounts, eligibility rules, or deposit schedules. It focuses entirely on monitoring unusual activity that may occur after funds have already arrived in your bank account. The same principle applies to pension income, whether it comes from a private employer retirement plan, a public sector system, or programs such as railroad retirement benefits. Cost of living adjustments determined by federal formulas also continue according to established policies. Any increases tied to inflation or annual policy reviews still occur as determined by those programs. The $250 monitoring concept operates quietly in the background as a protective measure, not as a barrier to the income you have earned and depend on. Why older adults are increasingly being targeted. Understanding why this protection exists requires looking at what has been happening in the financial fraud landscape in recent years. Reports from consumer protection organizations indicate that financial scams targeting adults over age 60 have increased significantly as more banking services have moved to digital platforms. Fraud attempts may arrive through phone calls, text messages, emails, or letters that falsely claim to represent government agencies or financial institutions. Some tactics create a sense of urgency or pressure, encouraging people to transfer money quickly before they have time to verify whether the request is legitimate. In many documented cases, the scheme relies entirely on speed, getting the victim to act before they can think clearly or consult someone they trust. A monitoring threshold can interrupt that sense of manufactured urgency by triggering a pause when unusual transfers occur in rapid succession. Even a brief delay can provide enough time for a customer or a bank representative to confirm whether a transaction was actually authorized by the account holder. For someone living on a fixed income, even a few $100s represents a meaningful portion of a monthly budget. Early detection before funds disappear is almost always more effective than attempting to recover money afterward. This is why financial regulators increasingly emphasize prevention rather than relying only on investigation after losses have already occurred. What happens if a legitimate transaction is reviewed? This is another question that comes up frequently, and it deserves a clear answer. In many cases, if a transaction triggers a review, the bank may simply contact the account holder to verify that the activity was authorized. That notification might arrive as a phone call, a text message alert, or a secure message through an online banking portal. You may be asked to confirm your identity and verify that the transaction was genuinely initiated by you. Once that confirmation occurs, the review process can typically be completed quickly. It is important to understand that such reviews are not accusations of wrongdoing. They are precautionary steps designed to confirm that account activity was authorized by the person who owns the account. Responding calmly and verifying the transaction typically resolves the situation without any difficulty. One important caution: if you ever receive a message claiming to be from your bank and you feel uncertain about whether it is genuine, contact your bank directly using the phone number printed on the back of your debit card or on official bank documents you already have in your possession. Never share sensitive personal information in response to an unsolicited phone call, text, or email, even if the communication appears to be from your financial institution. For seniors who prefer in-person banking. For individuals who prefer visiting a physical bank branch rather than using online services, day-to-day banking experiences generally remain the same. You speak with a teller, make deposits, withdraw funds, and handle questions exactly as before. Monitoring systems operate internally within the bank's technology infrastructure. Customers are not typically required to complete additional paperwork or enrollment simply because these monitoring systems exist. The process happens quietly behind the scenes. For customers who do use online banking or mobile apps, These monitoring systems work alongside existing security features. Two-step verification, deposit notifications, and transaction alerts all continue to function as they did previously. The $250 monitoring threshold simply adds another protective layer within the bank's internal security architecture. Joint accounts and family members with access. Some bank accounts are shared between spouses or provide access for trusted family members or caregivers. Joint accounts typically reflect a broader range of transactions because more than one person uses them. Bank systems generally recognize established patterns over time, and activity that is consistent with that history is typically treated as normal. However, if a new user begins initiating unfamiliar transfers to unknown recipients in rapid succession, that activity may appear unusual to monitoring systems regardless of how the account is structured. If you have recently added someone to your account or significantly changed your banking habits, speaking with a bank representative can help ensure that your account history accurately reflects those changes. Family communication also plays an important role. When relatives understand your regular expenses and authorized transactions, it creates a clearer record of normal activity that can quickly distinguish legitimate transactions from unauthorized ones if any questions arise. Practical steps you can take right now. Here at Senior Security Updates, Zayne and the team always want to leave you with concrete actions, not just information. Here are several straightforward steps that can meaningfully strengthen the protection around your retirement income. Review your bank's alert settings. Many institutions allow customers to activate notifications for deposits, withdrawals, or transfers above a certain amount. Receiving those alerts means you can see account activity quickly and identify unfamiliar transactions early. When your own personal alerts work alongside the bank's internal monitoring systems, you create a significantly stronger overall layer of protection. Make sure your bank has your current contact information. Your phone number, email address, and mailing address should all be up to date. If a bank ever needs to verify account activity, having accurate contact details ensures you receive that communication promptly. Delayed notifications can slow down verification, so this simple precaution matters more than most people realize. Keep a basic list of your regular monthly expenses. This does not need to be elaborate. A simple written list of the bills you pay, the approximate amounts, and your usual payment dates makes it considerably easier to recognize unusual activity when reviewing account statements. It also helps clarify things quickly if a bank ever needs you to confirm a transaction. Small organizational habits like this contribute meaningfully to long-term financial security. Be cautious about unsolicited communications. If you receive a phone call, text message, or email claiming urgent action is required regarding your bank account or government benefits, do not respond directly to that communication. Contact your bank or the relevant government agency using an official number you already have. Urgency is one of the primary tactics fraudsters use to prevent people from thinking clearly before acting. Talk with trusted family members about your finances. Open communication with relatives you trust creates an important layer of informal protection. When family members understand your normal banking patterns and authorized transactions, they are better positioned to help you identify something unusual if it occurs. What about stimulus or special government payments? Some viewers have asked whether these monitoring guidelines are connected to any upcoming stimulus payments or special government assistance programs. In general, if the federal government authorizes any economic assistance payments, they would be distributed through the same treasury systems that deliver regular benefits. Monitoring procedures do not prevent those deposits from arriving in your account. What they are designed to do is help protect funds after they have already reached you, which matters especially when additional deposits may attract attention from individuals looking for opportunities to commit fraud. Having security monitoring in place during periods when extra deposits arrive can actually provide added protection rather than creating any obstacle. Addressing the concern about financial independence. Occasionally, older adults worry that banking regulations are intended to restrict their financial independence or limit their control over their own money. That concern is completely understandable. Many policy discussions in the past have not adequately focused on the specific needs and concerns of seniors. However, Monitoring tools described in consumer financial protection programs are designed to identify fraud rather than limit legitimate account activity. The purpose is to help detect suspicious transactions while allowing you to continue managing your own money exactly as you normally would. Your benefits continue according to existing rules. Your pension arrives on schedule. You maintain full access to and control over your own bank account. What these monitoring systems change is the bank's ability to quickly identify activity that does not belong there. The broader picture: financial security in a digital age. Federal officials have described this type of monitoring as part of a broader effort to modernize consumer financial protections in an increasingly digital banking environment. Today's banks process millions of electronic transactions every single day. Automated monitoring systems allow institutions to look for unusual patterns across enormous numbers of accounts far faster than any manual review process could manage. As financial technology continues evolving, additional security measures will likely emerge over time. New tools and policies will develop as digital transactions become even more common. But even as those systems evolve, the core elements of retirement income programs continue operating according to established laws and policies. Social Security benefits continue through the existing federal system. Pension programs continue according to their plan documents. Individuals retain the right to access and manage their own bank accounts. What continues to improve is the technology used to identify and prevent unauthorized access to those accounts. Better monitoring systems mean stronger protection for the retirement income you worked decades to earn. Closing thoughts from Zayne at Senior Security Updates. The key takeaway from everything we have covered today is this: the $250 monitoring guideline represents a security approach, not a restriction. Its purpose is to help identify unusual transactions and reduce the risk of fraud affecting the accounts of seniors and benefit recipients across the country. Understanding how these systems work is one of the most effective ways to feel confident rather than anxious about changes in the banking environment. When you know what the system is designed to do and why it exists, the process becomes considerably less intimidating. Staying aware of financial updates, maintaining consistent banking habits, keeping your contact information current with your financial institution, and remaining cautious about unsolicited communications are all simple and practical ways to support your own financial security. At Senior Security Updates, Zayne and the team are committed to making sure you always have clear, accurate, and useful information about the developments that affect your retirement income and financial well-being. If this video helped clarify something important for you, please share it with someone in your life. A family member, a neighbor, or a friend who receives government benefits and might benefit from understanding these protections. This is exactly the kind of information that makes a real difference when it reaches the right person. And drop a comment below telling the Senior Security Updates team any questions you have about your banking or benefits. Those questions shape what Zayne and the team cover next, because this channel exists to address what matters most to you. This video is intended for general informational and educational purposes only. It does not constitute financial, legal, or banking advice. Please contact your financial institution directly for information specific to your account and always verify updates through official government sources. Thanks for watching. Stay informed, stay protected, and we will see you in the next one, right here on Senior Security Updates.